Hi, this is Liqian Ren, Director of Modern Alpha Wisdom Tree ETFs. Welcome to China of Tomorrow podcast series, where we navigate China, India, Japan, and the broader emerging markets with members of Wisdom Tree and other industry leaders. Hi, today is November 11th, 2024. A lot to cover on China last 2 weeks, and it's also Singles Day shopping day in China. It was kind of invented by Alibaba. So, but I don't think, I think in terms of consumption, there's, still weak consumption. So anyway, we're not going to spend a significant time on that. Maybe next time we'll talk a little bit about Singles Day. But essentially in the last 2 weeks, there's a huge headline about Thursday. I think China was, as our last episode said, China was going to wait until the presidential election in the US and also the Fed meeting. Expectation were kind of high, although if people follow me, I didn't have very high expectation of the stimulus. I know the stimulus will be a little bit bigger that if President Trump was elected, because it poses more uncertainty for China. But I think in the beginning, people maybe was expecting a bigger package, but I sometimes it's hard to take a read on the market sentiment. But overall, I think on Friday local time, when China's People's Congress announced the so-called stimulus package, which was about 2 trillion yuan a year extra debt swapping with local government. So the nuance is quite important. So the debt swap works as the provincial level, they have these special purpose bonds. They will, give those money that can get at the market, can command lower interest rate, and then swap the many local government debt and sometimes shadow debt. Those are usually very high interest rate. So in some way, the actual stimulus package of this part is more a debt refinancing or debt restructuring. So it's not debt write-off. In Chinese local language, I think it's confusing to use the words debt write-off, because right now it's not the stage of debt write-off for the local government. And the second thing is a lot of those so-called shadow debt by local government, is this the government says the goal is to get rid of all the shadow debt, but I think many people who estimate local government finance will say this is not enough. On Friday, I think the market was quite disappointed. Actually, in terms of what's announced, like the 2 trillion yuan, that's what most people were expecting before. I think the market is disappointed because it didn't announce as much, like more broadly than what when the market wanted. I actually think that just on this particular issue, I feel like the market still haven't quite get like the way things work in China, that yes, actually the broader package will be announced. There will be money coming for housing market and then a little bit consumption. And I actually will say that I believe these measures are not going to be as effective as the government wanted. And then after a couple months, they're going to have to change some of the policy combinations to make it more consumer oriented, more stimulating consumption, more income support. And I do believe those policies will come. So in terms of, again, we've talked about on China equity a lot of times, but China equity is high risk a lot of times because also people don't quite understand in China, the governments are not as attentive to market and market expectation as in the US. And I think a lot of times people use the same framework to go look at China, that's kind of increasing, sorry, increasing unnecessary, I would say, um, kind of the risk, the sentiment shift just shifts so much from one day to the other. Even though if you understand how kind of decisions got made, how things got released in China, um, I would say the general headline for fiscal policy and monetary policy is positive in the next year, at least in the next 1 year, anticipating quite uncertain policies coming from President Trump um, administration. So I think that that's really important when you think about China. And that also means when you build a portfolio with some China exposure, you do want to build it very slowly, not fear of losing out, but also not being carried away by by the sudden disappointment of a policy announcement. I think also just yesterday, People's Bank of China, which is the China Central Bank, the governor Pang, he also used a slightly more positive language for monetary policy, more accommodating monetary policy than before. Before it was more on stabilized, kind of a not a proactive monetary policy. So I think in terms of headlines, generally it will be positive, and then the government does have the implicit local government put, so that the other end of the market, at least local issues, is somewhat lower bound. Now, obviously, we don't know what the lower bound is, but I think it's just a fact that you know that the government has money that will come in, should support the market to a degree. Um, the second thing, I think everybody, we talked a little bit on President Trump versus, potential President Harris, and now we know that President Trump is going to be, then he's definitely a bigger challenge for China. Oh, by the way, it's not generally a surprise for many Chinese, actually. I think locally there is this Fudan University prediction center, the complex project forecasting center. They've done really a good job in terms of before they've somewhat forecast that Russia invasion will happen. And then this time they put 60% Trump win as their forecast, and turns out to be correct. I mean, it is in some way, actually, for people who don't pay attention, but for people like me who look at China's local market, brokerage and local institutions analysis of the U.S. economy and the U.S. politics, actually many of them are not too bad. So it's something interesting. I think U.S. research on China will also improve as more people, more people who really to explain the situation in China better. U.S. is, fortunately is a very open market, and then people, the kind of information you can see from here is same if you were in China. So I think President Trump's whether he's going to put the two biggest thing is whether he's going to put 60% tariff on China. I actually think that part is also kind of a negotiated outcome, but tariffs will increase under President Trump. And the second thing is, I think the Ukraine-Russia conflict. I do think with President Trump in place that there's a high likelihood of that conflict getting wind down. That at least that's I think that's many people's expectation. We will see how it turns out in 2 years. But actually, in China, that's not necessarily a completely clear good signal, because the main reason U.S. is winding down Ukraine conflict is because they want to focus resources in competing with China. So I still think ultimately it's a tech competition. So for China, if they can make a technological breakthrough, if their companies continue to be able to export, then China should benefit from it. For the U.S., obviously ending the conflict could could be getting more focus on Asia Pacific. So considering the Asia Pacific now has quite the economic center now. So I think the U.S. Is generally could be good for the global positioning of the U.S. Obviously, a lot of these things are so geopolitical. It's very hard, very long-term trend. I think for China equity, our baseline is still that the headwinds are still very very many. On the other hand, I think if one is willing to bear the really terrible times, the return on foreign China equity not necessarily going to be low, because at least for now, if you look at the export data and if you look at the technology progress that's being made by Chinese local companies, those still offers a good hedge for your global portfolio. So thank you, and I think we again for the Singles Day, I think the expectation is slightly on the positive side, but we'll also look on when the housing price continues to dampen people's people's mood for spending, particularly the youth unemployment rate still quite elevated, which the difficulty of getting jobs usually is a big constraint on consumption. But I wouldn't be too negative on that either, because a typical Chinese household has a significant saving. And also in China, the helping of family members is probably significantly more than the US, because China is still quite the family, parents shouldering kids, wedding, kids, housing purchases, that the degree is significantly more than in the US. So consumption has to be viewed from that perspective. So thank you for hearing us. We do look forward to feedback. I actively tweet on Twitter, but Wisdom Tree also have significant materials on the website. You can listen to past episodes to get a general feel of how we are looking at China. Thank you.